So we are at a very critical area in regards to Tesla stock that pretty much everyone is aware of, especially because of the nail-biting date of June 13th, where we get an update on the vote for Elon Musk's compensation package. Now, in this video, I want to go ahead and expand on why there is a strong possibility that we may finally have some positive momentum in regards to Tesla. Now, for those of you guys that are new to the channel, I've been kind of very tough on Tesla for a while. In fact, back in December 28th, I made a video stating how Tesla stock was significantly overvalued from a fundamental perspective and a technical perspective. And I made several videos stating that Tesla stock was likely to fall down. And that's exactly what we ended up seeing. We saw Tesla stock fall down tremendously, and it wasn't until I made this video right over here on April 23rd where I highlighted that I bought a little bit more in terms of, my position into Tesla, which was right after the earnings, which places us right around over here. And so for a while I've been saying, look, now we're pretty much just moving sideways, but we could finally have that push that we need for Tesla to kind of get close to that $200 area, which would be very exciting, as that would provide that confirmation of an uptrend. Now, why is it that I believe Tesla stock may have that positive momentum? Well, for one, I want to take a look at things from a macroeconomic perspective, as I often do on this channel. Now, just today we had the JOLTS report highlighting that job openings in the United States fell to the 3-year lows, showing that the labor market is cooling. Now, of course, for someone who's just not familiar with why this is positive news, you may think, well, job openings contracting, that's bad. Well, yes, in a normal economy, but right now we want to see the labor market cooling off, as that signals for the Federal Reserve to finally start cutting the federal funds rate, which would lower interest rates for borrowing, which of course would be very good for companies like Tesla, which are, very sensitive to rates. And so this is good news, right? And this is kind of in syncing a line with the recent CPI report showing that inflation is cooling down. And then we recently had the PCE report also highlighting that inflation is still cooling down. And so everything is kind of providing this opportunity where, look, things are finally slowing down. Not that it's great, but it's finally slowing down in the labor markets. We're seeing inflation trend down as well. The trend of inflation, it's still going up, but at a slower pace. And so that bodes well for the central bank, the Federal Reserve, to start cutting. But we also have some other foreign central banks that are going to make their decision on monetary policy this week as well. For example, we have the Bank of Canada, which is the Central Bank of Canada, make their decision tomorrow, which I believe is likely. I have like a 70%, if I had to guess, if I was a guessing person, I believe that there's a 70% chance that they may go ahead and cut. Now, even if they don't cut, it's not necessarily the end of the world. But as long as we hear verbiage of them signaling that they're going to be cutting fairly soon. Why is this important? Well, we tend to see a lot of the central banks follow each other. Not that they automatically, because one country is doing one thing, the other one follows suit, but typically that's what we see. And so we're going to see Canada first make their decision on monetary policy. And then afterwards, we get the ECB, which is a European central bank, make their decision on monetary policy the day after. And so these two central banks are going to play an influence on what we see within the Federal Reserve. Now, I believe that it's likely that we get cuts from Canada. But again, even if they don't cut, just the verbiage of them signaling that it's almost that time to cut will bode well for the market. And that's going to help push the tide up for Tesla stock to also kind of get climb up out of that area where we've been pretty much consolidating for quite some time. But on top of that, we recently had Morgan Stanley do a poll on what they believe the June 13th outcome or results are going to be. And in their poll, 57% of their 109 survey respondents expect an approval of Elon Musk's compensation package. Now, of course, you can't extrapolate whatever the results were from this Morgan Stanley poll, especially it's such a small poll, just 109, markets, participants or people surveying in this poll. You can't really extract that to what the real outcome is. but it is a positive sign that we may see Elon get that compensation package. Now, I know a lot of individuals are against it, a lot of people are for it. I'm not here to tell you what you should do if you haven't voted. I personally, I did vote. I said, look, just pay the guy. We already voted for it in 2018. Let's go ahead and just do it again, especially because I believe that we would have a negative outcome. It's very likely if Elon Musk didn't get this compensation package that we're likely to see Tesla stock fall down, especially after Elon Musk has made threats of kind of pushing away from Tesla and its AI and robotics products and kind of just spinning off those products to XAI or X, right? And I get confused because SpaceX, XAI, X, it's just so many different companies. But the point is, if we don't have this compensation package for Elon, well, it may not be the best decision for Tesla if we have Elon Musk leave, especially because we're all evaluating Tesla to do very well in the future based off the idea of services from AI and robotics. And so, of course, if we just look at Tesla from a car company and only as a car company, well, that means that it would probably be very overpriced if we're only looking at it into the future as just a car company. And so we have the expectation that it's going to be doing more. And if you pull that away from the equation, that's not good. So this is why, I personally, I'm voting for Tesla. I do have exposure to Tesla, my long-term portfolio. It's not the biggest position anymore. Tesla used to have a bigger position for Tesla. Now, my biggest position is currently Nvidia, Spotify, and a couple of other trade ideas I shared for those within the Push and Profit private group, which, by the way, if you haven't done so already, make sure to check out the links in the description below, because one of the links is going to be a link to join my free weekly market post insights, where every single week I send out an email talking about what you should be aware of as a market participant. And also, there is also an additional link to join the Push and Profit private group, where you get access to my daily briefings where I talk about what I see going on in the overall markets as well as my trade ideas. So make sure to check out those links in the description below, and also subscribe if you haven't done so already. But I want to go ahead and also touch on something else in regards to Tesla. Now, this morning we had the scare with this headline that was published on many media outlets stating that Musk diverted Nvidia chips from Tesla to X. And pretty much this headline that was all over the place shared how Elon Musk diverted a large amount of AI chips from Nvidia that were reserved for Tesla to his social media company X, formerly known as Twitter. Now, this obviously caused a lot of fear, but luckily we had some clarification from Elon Musk later on stating that Tesla simply had no place to send the Nvidia chips to turn them on, so they would have sat in a warehouse, and so he pretty much should have just had them shipped off to the other company. Now, he did also expand on something else that was pretty interesting, stating that of the roughly $10 billion that's going to be spent in AI-related expenditures, I said Tesla would make this year about half is internal. Primarily, the Tesla-designed AI inference computer and sensor presets in all of our cars, plus Dojo. For the building of this AI training supercluster, NVIDIA hardware is about 2/3 of the cost, and my current best guess is for NVIDIA purchases by Tesla are about $3 billion to $4 billion this year. And so we did get that clarification from Elon that Tesla is not spinning off what it's doing in regards for its AI segments of the company into a separate company. And so this was definitely great news, especially because there's been a lot of fear. For example, we had this publication from Electric, and one of the things they mentioned is that even if Elon Musk does win this vote in his favor, that Tesla may also face other lawsuits regarding its corporate governance, simply because, again, Elon Musk threatened not to work on AI products at Tesla if he doesn't get the 25% control over the company, despite saying that Tesla is worthless without AI. And so, yeah, that's something that's still, out there. Of course, even if the compensation goes in Elon Musk's favor, he's likely going to face some type of backlash, some sort of lawsuit. The lawyers are going to be hungry for more, especially because of this comment. Now, should he have ever made this comment? Probably not, but I think was kind of one of those sacrifices, one of those necessities to kind of get everyone on board to really try to vote for his compensation package. So again, that's just what it is. Now, of course, this publication, the author mentions that
they dislike a couple things for Elon. Although they want him to get the compensation package, one of the things they mentioned is that they weren't happy when Elon sold his shares previously to buy Twitter. But of course, they mentioned that it is Elon Musk's own money, he has his right to do so. But they feel like Elon loses his credibility simply because he made this tweet back in 2013 stating, "Forgot to say one thing at Tesla's annual shareholder meeting. Just as my money was the first in, it will be the last out." However, we've seen multiple occasions where that wasn't necessarily the truth. But again, it's kind of hard to kind of stay onto one goal for a whole decade. I mean, if you think about it, this was more than a decade ago. And for the most part, Elon Musk did stick to his promise, but he did want to go ahead and do a couple of things and, of course, use the capital to make the acquisition of Twitter, now known as X. And I still believe that although it has taken away from the focus of Elon, some point in this timeline, I think it's going to have a huge benefiting factor in regards to Tesla. I shared how it helps with the kind of not really have to spend on advertising because you own a whole platform that makes money from advertising. So it's kind of one of those, it's a difficult thing, right? But of course, Elon Musk at the end of the day is entitled to spend his capital however he prefers. But that was just the author's take. Now, going into the technicals of Tesla, right? I've been saying for a while that I'm not buying anymore at these times. Every single time we have a green day, everyone gets hyped. We have a red day, everyone gets worried. I said, look, I'm not worried until we break out of this shelf of volume where we have a lot of volume relative to price. Because I said we're going to have a lot of consolidation. Of course, if there's a lot of volume relative to the price, that simply means that there's a lot of buying and selling. And if there's a lot of buying and selling taking place, well, that means that not one is in control, nor the buyer nor the sellers. And so what that means is consolidation, and that's exactly what we're seeing. I mean, we see green, red, red, green, red, red, green, red, 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 you know, and nothing really of any significance taking place. However, with the macroeconomic events taking place, with the recent macroeconomic data that's already come out showing that the labor markets are softening, we may potentially have some good news that's going to bolster the broader markets, but also bleed into Tesla as well and cause Tesla to kind of start to fly out of this area and go into finally the 200s, where you see I had this bell notification where it's around 194.56, where I plan to buy more shares in my long-term portfolio. Again, you guys should only do whatever you see value, regardless if you're investing or trading. Whatever you're doing, you shouldn't follow what I'm doing. Just because I've been right in the past, previous performance is not indicative of future performance, so that's something I want to be mindful of. Just because I get it right doesn't mean I'm always going to get it right, but I'm believing that we're likely to see some optimism. Now, again, I don't have a crystal ball, and we could just as very well see Tesla stock fall down and below the shelf and go down to this like 150 area right around over here. And that's just as a big of a possibility. Although I believe that we have things lined up for the positives, if that compensation package doesn't go through, well, that may throw a lot of things off, as well as if we perhaps have the central bank state that maybe they won't cut for a much further time. That could also bode as bad news for the markets as well as Tesla. So again, we're at a crucial point, but it's likely to have we have some good news, but at the end of the day, we still have to be mindful. I'm not going to buy in just yet with my fingers crossed, because that's not the way I like to participate in the market. I like to wait for the price action to confirm itself, and so that's what I'm doing. But again, you guys could do whatever you see value in. Hopefully you guys found some value in this video, by the way. And before you guys go, make sure to check out this video right over here where I talk about options flow, and I'll see you guys on that next video. Take care, guys.